Let's begin with our market panel. Joining us now are Dana Dioria from Envestnet, and Adam Crisafulli from Vital Knowledge. Welcome to you both. And Adam, let me get started with how you're interpreting the action we've seen. We got the S&P 500 basically in a 5% pullback. A 5% pullback after a 20% run pretty much could happen for any reason, but there's a lot of reasons being thrown out here, from yields to concerns about the Fed to bad reactions off of earnings, and maybe inflation picks up again. What's your read?
Yeah, I think the primary catalyst, it's mostly technical in my opinion. I think you had a lot of people dive into equities in July. So there's a positioning and sentiment now that flips into being a headwind. But I think fundamentally, the biggest change in the last couple of weeks has been the narrative around inflation. We've had a months-long process of disinflation driven by base effects, driven by commodity prices, and a couple of other factors. And I think the July data on the CPI and PPI has created concern that that process is now stalling or possibly even reversing. And I think that, more than anything, has contributed to what you've seen in yields, and then that's fed back into equities and caused a slump that we've been in. The other critical components of the market, earnings and underlying economic growth, are both doing very well. If anything, I think both those are in a better position than they were just a couple of weeks ago. The recent economic data has pointed to a modest uptick in momentum, and then the July end earnings season, which really kicked off this week, has been pretty stellar. So Cisco and Walmart were the two big ones out last night and this morning. And then you had Home Depot, even Target, I don't think was nearly as bleak as feared. So it's primarily, in my view, a change in the narrative around inflation.
Dana, how would you approach it as an investor when you're presented with, a stock market that certainly had some questions around its valuation near the highs? Maybe they're still with us. And then you have the opportunity or perhaps the risk of longer-term Treasury yields pushing, 15-year highs. What do you think the market is presenting you with in terms of decent options here?
Yeah, well, I would echo a lot of what Adam said, and I think that being the case, leaning defensively is probably still a good place to be, right? So we know if you're in the market, and we represent retail investors, regardless of whether they're in an index fund or they're in an actively managed model that's, sort of closet indexing or low tracking error, they're all getting a big chunk of growth and tech communications, right? The enormous eight. So to the extent that you're going to tilt away and you can tolerate some tracking error, I would say to position a little bit more defensively, right? Look to quality, look to a sector like healthcare, for example, and low volatility, right? So that you can give a little bit more ballast to the equity in your portfolio.
Yeah, certainly the higher volatility, higher beta stocks have borne the brunt recently anyway. And by the way, we do have Applied Materials raw stores numbers are out. We're going through them. We're going to have them for you as soon as they are ready. You see the stocks both reacting initially, at least, to the upside. Adam, if you feel as if this is just kind of maybe a somewhat routine and technical reset of the market lower, how does it play out from here? Because a lot of folks will say, it can kind of feed on itself for a while. Maybe there's a recognition point that there were risks in the economy, either of short-term overheating or of tipping us into recession, that we weren't really appreciating a month or two ago.
No, so I think that, just looking forward, I guess the biggest problem is more just an issue of when do we get the next update on inflation? And so we don't get the PCE for July, until the end of August. And then you're looking at nearly a month from today when you get the August CPI, just to get another look at the, the evolution, the trajectory of inflation going forward. But, I kind of look at just the core underlying fundamentals, and, you're seeing it right now with another round of July end earnings on raw stores and AMAT. If companies continue to form like this, and they did in Q2, and they're doing it so far with the July end quarters, and growth stays on a healthy trajectory, I wouldn't say that it's necessarily overheating. There definitely are enough red flags on the growth front that I think it's going to give the Fed some pause. Mm-hmm. But, until I see a real sharp change in earnings, it's hard to kind of really say this is anything other than a normal, healthy pullback that should be bought. And that's my view. I do think, the valuation constraints on the upside, though, are pretty severe given rates.